Ano ai ke aloha ya kākou. Thank you for joining us today. In just a few moments, Governor Josh Green will sign a major bill to stabilize Hawaii's property insurance market following steep premium increases after the 2023 wildfires and global climate disasters. Facilitated questions and answers with media will follow promptly after remarks conclude, and the formal bill signing will commence shortly thereafter. Without further ado, it is my honor to welcome Governor Josh Green.
Aloha, everyone. So thank you for being here. As we come down the home stretch of bill signings, we're saving some of the biggest bills for this week. So this bill, as you can see, is a bill meant to stabilize our property insurance market. Senate Bill 1044, very significant. So an incredible, thanks. Set of thanks are due to Senator Kehokulole, Representative Mateoshe, and all their teams. Thank you, leadership, as well. This bill is here because it has become increasingly clear that our housing market was unstable. After the fires, the difficulty in insuring ourselves was setting the condo market upside down. And so what we did is we embarked on a process, just a thoughtful process, with our insurance commissioner, Bump, and their team to figure out a way to keep our condo market solid. It affects tens of thousands, if not hundreds of thousands of our citizens here. So let's go to the first slide. So what do we have to do? We have to address the property insurance gap. Back in 1993, we developed a thing called the HHRF, which is the Hawaii Hurricane Relief Fund, to deal with insurance challenges after Hurricane Iniki. What this bill does, after we went through emergency powers, we, in the moment, were encouraged by the House and Senate leadership and really people across the state to get involved so that the market didn't get out of control, so that people didn't lose the value of their condos, they didn't have to leave Hawaii. So we used emergency powers briefly, and the legislature stepped in and now have reactivated in statute the HHRF. What it does is it expands the powers of the Hawaii Property Insurance Association, HPIA, to provide extra insurance options, stopgap measures to allow for coverage of properties that are somehow in a gray zone, unable to get adequate insurance for their condo. I think we are still here. What it also does is it helps us underwrite certain insurance risks. You're going to get more details from either the insurance commissioner or our legislative leaders. It establishes the condominium loan program and a revolving fund to help buildings remain insurable when there's high impact repairs that have to be done. And it also sets up a loan loss reserve program. Essentially what it does is it provides a buffer if a building or series of buildings just can't get insurance. We don't want that to become a crisis, a property crisis. So we're very grateful for the input that came from many of the associations. That was excellent, excellent leadership. The insurance division took this to heart and worked tirelessly on this, and it also allows us to continue to study this. So the insurance division is going to be able to study market stabilization so we don't get surprised. There's other things that we're going to do later this week on this matter, and before I turn it over to Senator Kehokulole, I wanted to say this. This is one piece of the solution. Other pieces are continuing to build new housing, important for our housing market, settling the Maui wildfire crisis, and we're going to talk about that on Wednesday, making sure we didn't have extreme losses or long-term litigation in that space, and also having a buffer there with the securitization issues that we've been addressing. But this bill, I'm really grateful to the chair for spearheading, and the overall approach was to make sure we stabilized Hawaii in our housing market, and that's what this does. So thank you, guys. Aloha.
Mahalo, Governor. Next, I'd like to introduce Senator Jarrett Kehokulole, Chair of the Senate Committee on Consumer Protection and Commerce.
Thank you, everyone, for being here today. So when I was getting ready for this morning, I turned on the news to check on the status of the fires, and I watched an interview with Kat Ahuna from Maili, who had lost her home and somehow found the strength to take an interview for the morning news. And all the Lahaina memories came rushing back. And So I wanted to start with my aloha to the families on the west side. This is a very hard and stressful time for everyone out there, including the families who lost everything. And it's a reminder of how vulnerable we all are to disaster and how important it is to have insurance. So thank you, Governor, for convening us here today. I'm very grateful that we're here today to address this silent crisis that's pushing thousands of residents to the brink, skyrocketing insurance costs with no alternatives in sight. And this bill really lays groundwork for relief on that, especially for seniors who, with no alternatives are the most vulnerable to the price spikes or the cancellations that we've been seeing throughout the community. This bill really matters to them. And really there are thousands of residents, especially in condominiums, who live in places in town or, throughout the state, but especially like Vice Chair Fukunaga's district. And it also sets up a firewall for what could be potentially, to protect potentially hundreds of thousands of residents whose lives could be thrown into disarray if there is a broader insurance market cancellation, or another catastrophe like Lahaina. So I'm really proud of this bill because it was about bringing people together to work on a big, meaningful issue and address a complicated problem that really matters to a lot of local people. We did it in a responsible way, and so I am glad that I get to come up here and brag about how we all came together to fix something that makes life better for local people. And we did it together. We did it because when the bill didn't proceed at the end of the legislature last year, the governor stepped in and convened us. And it really was that collaboration that happened in the interim, following the momentum of the governor's emergency proclamation that made this happen. This bill is the result of 2 years of work from stakeholders from lots of different fields: banking, insurance, real estate, finance. We have actuaries in here. We have bond guys, regulators. And then he's not here. He really deserves to be here. Scott Psyche, the former speaker, was really the spearhead of this bill. It's actually his bill that he authored. And Representative Matayoshi and I were happy to take it up and reintroduce it this year. And I think it really is a testimonial to the value of the dreaded task force. A lot of times people want to blame the task force as a way to kick the can down the road or to defer a difficult decision. But this was the most complicated bill I've ever worked on, and it took a long time. It took a long time for all of us to really absorb all the different pieces of it. We still had to make a bunch of changes at the 11th hour just to make it all work, but it's really important. And so just to close, I do want to thank the people on the task force who did a lot of the work over the interim: Will Kane, Victor Brock, Mike Onofrietti, Allison Uyoka was critical, Representative Matayoshi, Jerry Bump, both Lindas, Izuka and Nakamura, Alex McClory, Sue Savio, the LRB guys who drafted this big bill, and all the insurance and agents and actuaries and drafters and everybody who was a piece of it. We just are here today to celebrate and be a part of the signing, but there were many hands that were involved in this, and I'm appreciative to all of them. Thank you again, and thank you, Governor, for making this happen. Aloha.
He's quite tall. Mahalo, Senator Kehokalole. Now please welcome Representative Scott Matayoshi, Chair of the House Committee on Consumer Protection and Commerce.
Jerry's going next, and he's tall too. This mic's going to be doing a lot of moving. Thank you to the task force, first of all. This was an amazing bill. Senator Kehokalole credited former Speaker Scott Psyche, but really Senator Kehokalole did an amazing job too at keeping everyone focused, really drilling down and learning the nitty-gritty of this bill. I came on the scene a little bit later, so I can not take full credit for this bill, but Senator Kehokalole has been on this since the start and really a driving force behind why we're standing here today. When we drafted this bill, it went through quite a few changes. And one of the changes that we made near the end that Senator Keokalole mentioned was we wanted to make sure that this bill targeted the average condominium user. We didn't want this bill to, and the capacity of this bill to get sucked up for luxury high-rises in Kaka'ako. We wanted to make sure that we got as much bang for our buck that we could. So we made sure that this bill really targets a section of insurance that will apply to most of the condominiums in the state and kind of spread out the help that this bill is going to offer. So I'm very proud of us for making sure that this bill was a focused effort in helping the average Hawaii resident living in a condo. I want to be very honest with you too. This bill is not going to miraculously bring insurance costs down to pre-Maui wildfire levels. This bill will expand the capacity for insurance. So if you're paying if you got a 500%, 800% increase on your premium, hopefully you can get back into the admitted market and it'll bring rates down. But I don't want to be representing this bill as a miracle cure. This is not a silver bullet. The part of the bill that I think focuses on the more long-term solution is the condominium loan program, which is one I want to talk a little bit more about today. And thank you to Gwen Yamamoto. Sorry, whoever's that was. Thank you to Gwen Yamamoto for helping to draft that portion of the bill with us. Condos have been falling apart. There have been cases of incredible deferred maintenance, water leaks, pipes bursting because they're old, and the water comes, if you're living in a 10-story condo, that water's coming all the way down to you on the bottom. When I talked to insurance companies, they brought up two things constantly when I asked them why insurance prices were so high for condos. They brought up water loss, and they brought up deferred maintenance more generally. But the water loss, the repiping, and the sprinkler systems were the two major things that affected insurance prices. So for the condominium loan program, I didn't want it to be fixing a cracked sidewalk. We wanted to make sure, again, we got the most bang for our buck, so we focused it on those high-impact repairs, repiping, sprinkler systems, both of which, if you do at the same time while the walls are open, are a little bit cheaper. But I think those are the solutions long-term that are going to allow condominiums in existence to continue to be in existence, to continue to function at reasonable insurance rates in the future. So while this bill is fantastic, I really hope that we can expand this pilot program, this condominium loan pilot program, for the long term, because that's the only way I can really see insurance prices coming down and staying down. Now the advantage, even if you are on a fixed income, if your condominium gets a loan, it should lower insurance premiums by repiping because, again, you're not as much of a risk of water loss. And it should improve the value of your unit, too, because now it's a unit with brand new pipes, new sprinkler systems, lower monthly premiums. So the condominium loan program for those condos that couldn't get a loan before, I think will really help long-term fixing our condominium problem. So this bill, again, has a short-term solution here where we're standing up HHRF, HPIA, giving capacity to the market to bring people off of the surplus lines. But it's also got a long-term solution in that it's looking to actually repair condominiums that have had deferred maintenance for years. So I hope that this is a good start, and we've got a lot of work in the future. But thank you to the governor, too, for pushing this. Thank you to Senator Keokalole and the entire task force, House and Senate leadership that did an amazing job pushing this forward, too. Thank you, everybody.
Mahalo, Representative Matayoshi. He too is quite tall. Up next, Acting Insurance Commissioner Jerry Bump.
Aloha, good morning. So where are we at? That's the big question that people are asking is, I'll also start off with thank yous to the governor for forming the task force, because that really got things started, and his emergency proclamations also kick-started everything. Thank you to the task force. Thank you to DCCA, the insurance division staff, the boards of HPIA and HHRF. All of their input has led us to today. So first we'll start with HHRF, Hawaii Hurricane Relief Fund. For these condominium associations, and we're not just talking about high-rises, that would be townhomes, single-family home associations, any association that gets their commercial property insurance in the state. They now, effective June 24th, the HHRF began receiving applications from associations' insurance producers. We already are hearing of tremendous activity on that. I think in the first week we had 80 applications received for quotations. We've already bound or issued 10 policies just in that first week. Anecdotally, we're already hearing of considerable amount of savings on two fronts, either directly by purchasing the policy through the HHRF for the hurricane coverage of an association, or through price pressure that it's putting on the rest of the market to bring their prices down. So that's also a very good result. So how does an association go about getting insurance through the HHRF? They would reach out to their insurance producer or agent. That agent then can reach out to one of the two servicers that have been tasked with by the HHRF, which is Zephyr Insurance and HIMIC. That's just for the hurricane coverage. For the remaining, what's called all other perils coverage for an association, that would be brought online by the Hawaii Property Insurance Association. They're in the process of getting going. They're targeting the fourth quarter of this year to begin accepting applications on that front. I don't think I have too much more to go. I'll give one example of what we've heard. So there was a building that acquired $85 million of coverage through the HHRF, and they paid for that hurricane portion of their coverage $143,000. If HHRF wasn't here and up and running, they would have had to pay $270,000. So they saved $127,000, or approximately 45% savings. So that's kind of where we're at. Again, there's no cap on the number of associations that can apply. Going to Representative Matayoshi, it is available for all associations to apply statewide. Okay. Thank you.
Mahalo, Commissioner Bump. We will now begin facilitated questions with media, and we're going to start with Ashley Missoula, Hawaii Public Radio. And before we begin, I will invite the governor up. Mahalo.
I actually think this question might be for Acting Commissioner. So you mentioned that there are, or Governor maybe you might know, but 80 buildings have applied at least. Can you give some characteristics about like where are these buildings? Are they large buildings? Like any demographic information across the whole islands, or just specifically in like Honolulu urban area? Any information about that?
Yeah, unfortunately at this time, since it was just launched 2 weeks ago, I just was asking for high-level detail on what type of the number of applications and the sort of high-level detail. As far as number of buildings, I've heard a few different examples. There's a building that was built in the 1960s. That was $100 million total value, so they were able to get $85 million of coverage through the HHRF. That was the example I gave of where they had saved $127,000 by getting their coverage through the HHRF. But no other detail at this time.
Mahalo. Next question, Daryl Huff, Hawaii News Now.
This ended up being a simpler solution, though, in the end, as complicated as it was, right? Because we were worried about this costing $500 million at some point. What's the end cost now in terms of taxpayers versus the ratepayers?
Sure. And we talked a little bit about this. I may call Jerry up again. I think $30 million was the initial allocation. And let's have Jerry come up too. With insurance programs, the beauty of this is we're able to spread it out over a long period of time.
So no new funds were allocated. This just taps the existing reserve of the Hawaii Hurricane Relief Fund, which was about $171 million in total. That will be split three ways, partly to the Hawaii Property Insurance Association for their program, the initial tranche of money for the condominium loan program, which will come along. It'll come online, we hope, next year. It's going to take some time to set up. And then the remaining funds will be dedicated to the hurricane insurance program, which, as noted by Jerry, 80 applications already in. So, we hope there's enough to cover, but the bill itself does not appropriate any additional funds.
Thank you, Senator. And so another thing that I didn't discuss earlier was the idea of stabilizing the market was this bill, plus our approach to the climate impact fees that we now have it in statute. So as everyone knows, that's going to be bringing monies into the state, and that will be a broadly discussed issue for the next several months to see how those monies can be best used. But we've done that, which will help us have extra monies for fire mitigation and disaster mitigation. And this is the kind of discussion we want to have, because the HHRF monies are not infinite, but the state now has capacity to raise monies to deal with crises. A lot of that's going to be direct funding for reef protection and shoreline preservation, restoration. But we can now have that discussion about when we generate monies from travelers through this 0.75% tax on TAT, is this a place where we also want to augment our funds? And I will remind people that is likely to have bonding capacity as well for much larger sums, because let's be honest, the condo market is very large in the state of Hawaii. You guys lined up for one? Yes, please.
So as far as ongoing costs to taxpayers, there really shouldn't be any. Like they said, we use HHRF's tranche to get this thing started. But the reason why this is not going to bring insurance prices back down to pre-wildfire levels is because it's being offered at market levels. So the amount of money being taken in by insurance premiums should sustain this program until we don't need it anymore. Now, we don't want this long term. We're working on getting insurance facilities together, getting the private market to come back down so that we don't need HHRF and hopefully maybe not HPIA anymore. But we're not looking to continue to invest taxpayer money in bringing this thing down. We got it started. It should be self-sustaining with the premiums being paid.
Mahalo. Next question, Stephanie, Aloha State Daily.
The representative mentioned that this is not a silver bullet. What else needs to be done or can be done to further stabilize the property insurance market?
That's a tough question. We are hoping that the deliberate way in which we put this legislation together and the way that it's ultimately set up will attract insurers back to the market, will attract reinsurers to come back, or reinsurers that exist in the market outside of Hawaii to take a look and see that we are proceeding responsibly. Like Representative Matayoshi said, this isn't a handout to the condominium owners. There are provisions in the bill that allow the HHRF to work with the condominiums to conduct the rehabilitation that needs to happen in the older buildings that need to do deferred maintenance work. So it is a comprehensive approach that we hope will show that Hawaii is taking this insurance issue seriously and will ultimately lead to Hawaii becoming a more attractive place for insurers to return to despite the risk.
I'll add to that. Again, after we had a $13 billion disaster, which required a $4 billion settlement, over $3 billion of insurance payouts, probably about $5 billion of federal support to get through, we knew we had to be out ahead of natural disasters, out ahead of the impacts of climate change. And that's why it was very important to show that we could settle in the state of Hawaii. It was very important to do this piece of legislation to stabilize the condo markets. It was also very important to show that we're going to deliver on the report that came from the fire investigations. And implementing all of those additional protections and having a mechanism to pay for it, as you know, a third of the dollars are going to come from the green fee into preventing disasters from affecting our housing. That's a big deal because unlike any other state, we now have a mechanism to protect ourselves, to put kind of a force field around ourselves against these big disasters. I would expect other states are going to need to follow suit. We thought that we were in an existential crisis as far as insurance goes. That's why they worked so hard to get this bill passed. So each of those pieces, there wasn't one silver bullet. There were like five to make sure that we come out the other side of the disaster with the best place for insurers to come. Interestingly, that may be the result of the wildfire, that we're so much better positioned than other states that have had a catastrophic flood. And our hearts go out to Texas and those that suffered this last weekend, or the individuals that, there were 16,000 properties that were destroyed in Los Angeles. It's very difficult to move legislation in California. It was not easy here, but we were able to get around one table. They have 10 tables they've got to get around in California. So Hawaii should be well positioned to make sure insurers support our housing community, and this is about one of the five pieces.
Mahalo, Governor. Nicole, Pacific Business News.
Hi. I would just have a question about single-family homes. I know it's a little bit different, but in the past year, a few insurance companies have stopped offering new policies or canceled policies for single-wall, single-family homes. So I'm just curious in the future if HHRF could be applicable to single-family homes, and then if not, or if so, how the other parts of the bill might apply to single-family homes and the issue with insurance there.
Yeah, just a quick comment. We have seen, and I'm going to ask Senator to come up. We have seen, and the rep, I've seen that stabilize quite a lot after an initial surge. We've of course had concerns, for example, on Big Island, where we had the volcanic eruption, and it's been almost impossible to get insured in certain parts of the state. This was first the condo focus, as you know, but that's when it comes.
So that's one of the major pieces of the bill is the HPIA portion. To Governor's earlier point about being one of the silver bullets, the reason why we had to get this bill done is because it updates and empowers the Hawaii Property Insurance Association to potentially fill that void if it's necessary. They are going through their due diligence process to spin up that capacity to deal with the existing crisis right now, but they do exist as a potential outlet should we see a broader failure in the single-family market. And so that's the thing. I mean, it's a very scary prospect to have to consider. And so that's why it was very important that we had that piece available. Both the HHRF and the HPIA already have the discretion to open up those lines of insurance if it's necessary, but we did need to make changes to the statute and basically update the mechanism so that they can undertake it, and then they also needed money. So that's the allocation that goes from the Hurricane Relief Fund to help get them situated in case something does happen and suddenly we do need to start providing access for single-family homeowners as well. Both of those organizations have the discretion to open up access to those markets if necessary. But what they didn't have was the administrative infrastructure. The HHRF went defunct, I think, around the year 2000 because the private market came in and took over, which is what we want in the long term. So they needed to have a board. They needed to conduct their administrative due diligence. They needed to get running again. And with the HPIA as well, they've only been covering mostly properties in the lava zone. So it's a huge undertaking to expand them to the size they'll need to be to cover those larger segments of the market. So this bill provides them the tools to do so.
Mahalo. Our final question. Daryl, Hawaii News Now.
I'm a little confused about the bifurcation of this into two funds. Why not have a single one? And Jerry, when you talked about the coverage that the one condo got, that's just hurricane wind coverage, and that they still have to come back to HPIA to get their all other risks covered. Is that correct?
So that was explored during the task force about creating a brand new fund. But one of the advantages was that HPIA is already operational, already providing insurance to single-family homes on the Big Island and other areas around the state where homeowners can't get insurance. HHRF already existed on the books, on statute, and it was there specifically for the hurricane need. So within a condominium association, there really are those two components to be fully covered. You need the hurricane piece, and then you need the all other perils. So that was looked at of trying to merge the two and create one, but we felt like the two risks are completely different. One is dealing with a catastrophic risk of hurricane, whereas HPIA can be more tailored to address sort of the deferred maintenance issue, the leaky water pipes and so forth. I'm not sure if that answered your question. Yeah. And it was just faster to get it up and running and getting it to market as quickly as possible as well. Yeah.
And I have to say, just kind of in closing, we're really impressed by the market forces that are already being seen. And so it's going to get more and more robust in these coming years. And just so for everyone out there who's watching, the reason this was so important is because if we can't get ahead of disasters and can't insure, and it seems obvious but it should be said, property values could really plummet if we are unable to insure and sell our properties. And so this was an absolute critical necessity in the housing market. Absolutely critical. So again, this is, I think, the way it was supposed to work. For something this complicated, a lot of thought leaders came together, as Jarrett said, and it really resulted in a thoughtful, thorough bill. I will not be surprised if each year they update it as we see how circumstances evolve. But our insurance market is better positioned than many others now after a crisis because of this bill. So again, many thanks, guys. Yes.
Mahalo, Governor. At this time, we will be proceeding with the bill signing, and we'd like to invite all key stakeholders. So I see our speakers, if you folks can come, and if any other key stakeholders. Then this includes if you're a cabinet member, Avivi Keoluolu, you should be coming up. Mahalo.
So right now we signed together Senate Bill 1044 relating to the stabilization of property insurance, and we do this especially for our kupuna, who we really have to make sure that they have housing in our condominiums.
Mahalo, everyone. This formally concludes today's bill signing.